Hello, this is Mike again with netpicks.com and the Options Mastery Program. This is the midweek recap video for Wednesday, October 7. So what I want to do here in this video, take a look at where the market's at here as we head into the second half of the week. Take a look at some key levels to keep an eye on here as we wrap up the week. And then we'll also walk through a handful of trades that we have just closed out here over the last couple of days. This is not meant to be a sales video. This is meant to show you my personal routine on a daily basis. I look at the same names day in and day out. So for some of you that have looked at some of the older videos, you'll notice that I'm not showing you different symbols every time. I look at a very small list of names, and that's by design. I want to get to know those names and get familiar with how they move. So, we're just going to keep showing you trades as they come. I've had a couple of comments come in saying, Mike, all you do is show winners. Well, I'll show the losers as well as they come. We've been fortunate enough here the last couple of weeks where the performance has just been phenomenal. It's hard to find a losing trade. So there'll be certain stretches during the year where we get everything to click at once. And when that happens, it's great. We want to take advantage of that. And we're right in the midst of one of those stretches now. So the losers will come. That's part of trading. Regardless of the system that's out there, everybody's going to have losing trades. And we'll show those as they come here going forward. So we'll take a look at some of those individual charts in just a second. So let's talk about the market as a whole here first. Let's go back to the end of last week in our recap video over the weekend. We saw a big time reversal on Friday. We had the employment number out. We talked about that. We saw a big gap to the downside and a midday reversal where we saw a pretty large reversal. In fact, it was the largest intraday reversal that we've seen in, I think, close to 4 years on the S&P. So very impressive turnaround, and we've seen that continue into early this week. Monday, very strong session. Gap to the upside, very strong from the start to the finish. We broke some key resistance levels, so the market tried to break out. We got into yesterday's session, kind of a mixed bag, and to be expected. We went a long way from Friday into Monday. I mean, that's a huge rally. So kind of digested the move yesterday, and then today we've seen another rally. Now the market hasn't closed yet. We still have about 10 minutes or so until the market closes, but it looks like we're gonna book some additional gains here today. So you can see the low that was established last week. And once we started to establish that low, we held a little swing level that we talked about in one of the previous videos. That little swing level that was at 186.92. And we bounced up from there, but what we mentioned was there was a lot of overhead resistance. There was a cluster of moving averages up above us that we were going to have to break through in order to continue to move to the upside. Well, so far so good. If we go back to Friday's session, we got to close up above the 20-period moving averages. Okay, that was extremely key heading into this week, and we talked about that in the weekend recap. So we started the week very, very strong. We gapped up Monday. You can see the gap here that I'm circling on the chart, and it's basically been a straight shot right up to the 50-period simple moving average, which we have tested here today. That 50-period moving average happened to be right around 200 on the S&P, the SPY to be specific. SPX stalled out right at 2,000 today. So a lot of resistance right there. There's no surprise that we stalled out right there. So what does that mean for the end of the week? Well, number one, when you start to get this type of a winning streak where you start to see the S&P up 6 days in a row, 7 days in a row, or 6 out of 7, for example, that's a long way to go for the S&P. I mean, look at this. We went from a low down at 187 all the way up to 199 without even a hint of a slowdown. Okay, that's a long way to go. So we can expect some choppiness in here. If we kind of settle into a little bit of a range here at 2,000 or 200 on the SPY, that's to be expected. I would also not be surprised if we saw a round of selling. Not calling for the market to collapse, but a healthy pullback down into the 20-period moving average, down around 195, that would be a welcome sight. What I don't want to do is have to continue to chase this move higher, because as trends develop, as they get long-winded, it's tricky to find trades that give you a good reward to risk ratio, and we're approaching that level now where, do I really want to chase it after 6 days of gains? Not really. So we do have some catalysts upcoming tomorrow. We do have the official start of earnings season with Alcoa releasing their earnings. We also have the Fed meeting minutes out tomorrow afternoon. And then over the next couple weeks, we just have a whole list of earnings releases coming out. So the catalysts are there for the next move. So would I'd love to sit here and give you an accurate prediction of what's coming the next couple weeks? Sure. I wish I could. I wish I had that information. But what I do as a trader is I focus in strictly on price. I'm not here to make predictions. I'm just here to focus on and point out levels that you need to be aware of going forward, and then we'll react accordingly to price. Okay, we're not here to just make judgment calls on direction and good trade setups. We're here to react to price action and take the best setups based on what the market's giving us. So up above us, the next area, of course, is 200. And then you'll see this whole cluster of moving averages in here between 202 and 204. That's the next area of resistance up above us should this rally continue to the upside. Now, along the way, we talked about this in previous videos. 0.50s and 0.00s, those are very key levels, especially on the index ETFs. So when I say 0.50s and 0.00s, I'm talking about 199.50. 200.00, 200.5. Those are key levels that will typically act as support and resistance quite often. I mean, we saw it down here, right? I mean, we saw the market bounce right off of 187. Okay, it's no surprise that those ETFs respond to those levels that way. So we'll keep a close eye on those. So my anticipation here, gun to my head, do I have to make a call? I'm guessing that we'll pull back. I'm guessing we'll pull back, see some selling pressure here over the next couple days before we head higher. I think that would be a healthy stair-step pattern to set up. Now, volume, what concerns me a little bit is the volume continues to drop off a little bit. We're not seeing, though, the big volume behind this move, which the market does not need volume to move to the upside. We've seen that over the past 2 years. But as the volume continues to drop, I think it's going to be very difficult to break some of these additional resistance levels up above us. So that's something to keep in mind. If we get a day of selling here over the next day or two and we see massive volume behind the move, that could be a game changer. We'll want to watch for that closely. Okay, so I would say for me personally, if I'm looking to play the next couple of days, I would say neutral to slightly bearish in the near term. Longer term, a lot of it's going to depend on the earnings releases that come out, but I would anticipate, I mean, with the trend change that we saw last week, I wouldn't be surprised long term going out a couple of weeks to a couple of months, if we could, stick with that bullish bias. But of course, like I mentioned a few minutes ago, we're definitely going to let price dictate what we do. So we're not going to jump the gun. We're just going to continue to take what the market gives us. Over on QQQ, a lot of the same information. I'll be able to move through this pretty quickly. Everything that I just talked about on the S&P really holds true over here on the NASDAQ. We've seen a heck of a run to the upside, and now we're stalling out right around 106, which happens to be a very strong area of resistance. You can see that whole cluster of moving averages right there. Okay, so we're going to need some volume to kick in here in order to break up through that resistance, in my opinion. Okay, down below us, 104, 104.30. That would be a first area of support if we do start to get some selling pressure over the next couple of days. Okay, and I've mentioned it in the past couple of videos. I personally, long term, would not be surprised if we get back down to the August lows. Okay, I just wouldn't. I think that's, before we head back to the all-time highs, I think those lows will be tested first. But we'll see what plays out over the coming weeks and months. Finally, on the Dow, a little bit different story here on the Dow ETF when compared to the S&P and the NASDAQ. So you can see the 50-period moving average is below us. So we do have a decent level there of support below us. The Dow has been pretty strong here. So we've got 167.37 below us as support. Up above us, we've got 170 to 171 as a first area of resistance. So we kind of remain in that make it or break it zone here as we wrap up the week. So I think we're going to have to keep a close eye on Alcoa tomorrow on the Fed meeting minutes. We'll just see how that plays out here to end the week, and we'll definitely give an update on that over the weekend in our weekend update. So why do I look at those charts? If I don't trade based off of daily charts, why do I even look at them? Well, for me as a trader, I don't look at the charts from open to closing bell. I don't have time to do that. So what I do is I look at these charts to kind of gauge where the overall market is at and where it could potentially be heading, and I let that influence my my position size. I don't jump into every trade with the same position size each time. Okay, in this case, if I get a new round of long setups based on all the charts that I just looked at, those 3 ETFs, I think the market's probably going to get a little tired here. We're a little long-winded on the upside. So if I get new long setups here, I'm going to take them with smaller position sizes. I want to protect the profits that we've just booked here over the past couple of weeks. And I don't want to continue to chase a trend that might be getting a little tired. Okay, now if we flip over to the downside and I start to see some key support levels broken based on these overview charts, then when I start to get over to my individual charts and my range charts, I may start to bump up my position size and get more aggressive. So these overview charts really help me place context around the overall market. It's not just enough to come in and see that, okay, the Dow finished up 120 points, the S&P finished up 15 points, the NASDAQ finished up 42 points. It's not enough. There's more going on under the hood that you have to pay attention to. Otherwise, you're really left just playing a guessing game. And I really don't like those odds. So what I do from here is I go over to our active swing trader charts, and that's the system that I use each and every day in my trading, because I cannot just look at a chart, and if I don't have a roadmap there, if I don't have defined entries, targets, and stops, I feel like I'm trading blind. And I don't like that, because then the emotional aspect of trading starts to kick in. So whether it's this system or any other system out there, I would highly encourage you to have a defined plan in place. So before you ever get into a trade, you know exactly where you would get out, where your targets are at, where your stop is at. If you don't have those, what you're going to find is you're going to get into a trade, it starts working against you, that human emotion is going to take over, you're going to want to protect your money, and you're going to jump out, and you could potentially get out early. Same goes for the profit side of things. The minute you start to get into profit, it's human nature to want to just book that profit and watch your account size grow. Well, again, you could potentially be leaving a lot of profit on the table because you're getting out early. So this is a very powerful system. It's not the end-all be-all as far as systems go. It's just what I choose to use in my own personal trading. So let's take a look at some markets that we actually took a look at over the weekend in our weekend video. Let's give an update on where we're at and how those trades played out. Let's talk about some of the index products. Let me zoom out here so you can see this. Okay, so over the weekend, what we pointed out, we had this long trade on SPY. We triggered in. It took some significant heat Friday morning on the gap to the downside. Okay, it looked like we were actually going to stop out. My stop was this series of blue dots down here, while my targets were these 2 series of dots up here. Now, fortunately, we all know what happened in the market on Friday. We reversed higher. I didn't quite hit targets on Friday. I had to hold over the weekend, but look what happened Monday morning. You can see this gap to the upside, and we actually gapped up past our second target. We actually took a little bit larger winner than we were expecting. So to play that move to the upside, I played the October 193.5 call options. So that gave me control of 100 shares of the upside on SPY. And I got that option for $2.56. So $256 per contract gave me control of those 100 shares. Now, when I closed it out Monday morning, I sold out of those options and I booked about $188 of profit. That's a 73% return, and I'm in and out essentially 3 days, 3 trading days. I mean, you have to factor in the weekend there as well, but 73%. Okay, that's the powerful part about the system. Like I mentioned, if I don't have that calculator here telling me where to get in and where to get out, I guarantee you on that gap to the downside Friday morning, if I don't know where my stop's at, I'm probably panicking. I'm probably jumping out with a loss. But because I had that defined stop in place and that stop was not hit on Friday morning, I was able to stay in long enough, and that paid off in a big way, to the tune of a couple $100 per contract, or 73% return. So we are now flat at the moment. We're just waiting for the next setup to print. We have tested our signal line here, so we could potentially get a long setup over the next couple of days, like I mentioned a few moments ago. If we do get another long setup to trigger in here over the next couple days without a significant pullback, I'll take it, but I'm going to be very conservative. Number one, I would cut my position size, and number two, I could potentially look at a call spread as opposed to a long call. That way I can reduce some of my risk, protect the profits that I just booked on the long trade, and still stay active in the market, just in case this trend does continue on for a few additional days. So we're currently flat at the moment on SPY. Over on QQQ, which is the NASDAQ ETF, so we had this long trade, again, very similar story to SPY. We had our entry point right here. We had our targets up above. We had the stop below. I went into the 101.5 calls in October, and I paid about $250 per contract there. So again, I'm talking about a couple $100 per contract to control 100 shares, a pretty decent ETF here, $100 ETF. So it's great leverage. That's why I play the options. Now, we did hit full target come Monday morning. Again, the gap to the upside to start the week really helped us out. So all these trades that we talked about at the end of last week did hit full target. We booked $160 of profit. That's a 63% return. Again, we're in and out. Okay, we're basically in and out in 2-3 trading days. I mean, that's the ideal holding time for us. Anywhere from 24 hours on out to 2 weeks is my ideal holding time. It's what I classify as a swing trade. Okay, so really nice move there on QQQ. Let's take a look at Google. That was another one that we took a look at over the weekend. Zoom out so we can see the trade. All right, so it was this trade that we talked about. We triggered into it. It kind of chopped around. I mean, heading into the weekend, I mean, we were looking at it saying, you know, we hope that there's some upside follow through, but it did look a little suspect. Well, fortunately, we saw the big move to the upside on Monday, so you can see that we did hit our full target here. Notice that once I hit my first target, the stop moves up to break even, and then I start to initiate a trailing stop as well. Okay, so we did hit full target, but worst case, had we just missed out on that target and price action pulled back, I was booking profit as we went. So that's a great position to be in. So to play that move to the upside, I was out in the October monthly options, and I went with the 635, 660 call spread. So that had me buying the 635 call and at the same time selling the 660 call. The reason I needed a call spread, I mean, this is a $600+ stock. The options are very expensive. I wanted to lower my cost. I wanted to put on a little more conservative trade. So in many cases, when we compare our long call spreads to our long calls, the call spread allows us to get in for around 50% of the normal cost of a long call. Okay, so that's what I'd like to do there in reducing risk. So I put that position on for $11.85. So it's just over $1,100 per spread. Might seem rich, might seem expensive, but remember, by putting on each spread there, I'm controlling 100 shares of a $600 stock. So it still is really nice leverage. Once we hit that full target, I closed it out for $17.50. That gave me $565 of profit. That's a 48% return. Okay, here again, we're in and out of that trade in three trading days, plus the weekend. Okay, so 43% return, not too shabby. I'm not complaining about that at all. So really nice trade there on Google. Let's talk about Amazon. That's another one that we took a look at over the weekend. Okay, very similar story. Okay, we tried to play the upside. This is really what a textbook trade. Okay, we were into this trade Friday afternoon. After the market rallied, we reversed Friday. We've talked about that. And we got this trade to trigger in on the long side right here, right at our entry point, which was at 525.03. Now, the reason I say this is textbook because we never took any heat on this trade. We were basically in profit from the get-go. Okay, now we came in Monday morning, we saw the gap to the upside, and we hit full target very quickly. So we were into the trade on Friday. Mid-morning, Monday, we're out of the trade. Okay, how did I play it? I put on the October 520, 545 call spread. Put it on for about $1,133 per spread. Okay, once we hit full target, I sold out of that spread, booked a $627 profit, 55% return. Okay, so 55% return in 2 trading days. It doesn't get much better than that, right? Okay, we're not holding for weeks or months on end. The time decay is not killing us. We played it perfectly, and the active swing trader system outlined those trades for us. So there was no guesswork involved. I mean, we're just following the map. These trades print in real time. I mean, there's no guesswork here. Okay, there's no looking back and saying I would have gotten in there and would have gotten out there. Everything is outlined for us. And now we have a new long trade that has set up. So we could potentially be looking at a new long trade there on Amazon over the next couple of days. I should have pointed this out. Let me quickly go back to Google. I should have pointed this out. After we booked the full winner, you'll see a new long setup that printed there. That was a trade that we actually missed out on. Reason being, there was a gap to the upside, and we actually gapped up past an entry point. And the way that we teach our students to handle those situations, we don't chase gaps. We wait for gaps to fill. Now, if price action were to pull back to our entry point and stabilize right there, we could get in sync with the trade. But because of that overnight gap and the way that we handle gaps with the Options Mastery program, we did not take that trade. So we missed out. We were fortunate enough that gap, many times gaps are looked at as a bad thing, but the gap actually helped us out. It prevented us from catching that losing trade. And now we could potentially have a new long setup. You'll see it printing right here, right around 672.70. That could be a potential trade over the next couple days also. Energy has just had a huge rebound over the past couple of weeks, really. And we've talked about that in the recap videos. We've been very profitable with energy, both on XLE and USO lately. Let's take a look at XLE. We played the move to the upside. We had a call on out in October, the October 61.5 call. It was put on for $2.05. We were playing this move to the upside right here. So we got into the entry right here. Bought the 61.5 call for $200, $205 to be exact, per contract. In and out. I mean, in on a Friday, out on a Monday, caught the move to the upside, and booked another $165 of profit per contract. That's an 80% return in less than 2 trading days. So perfect way to play the upside. We actually had some additional trades on XLE. I'll be covering these later in the week. We actually sold some put spreads a number of weeks ago as well in both USO and XLE. Those hit full targets. So just a really profitable stretch on energy. And now we've got a new long setting up at 68.52. This is another example where I really don't want to continue to chase this to the upside, but my system's giving me the setup. So if that one does trigger in, I'm going to be very conservative. I'll probably take it with, 10 to 20% of my normal position size. Okay, because again, I just think we're getting a little bit extended here on the upside, and I want to protect some of these recent profits. We also have a few trades that I haven't even had a chance to mark up. We'll cover them in the weekend recap. I want to keep these videos relatively short so I don't keep you all evening. We've also closed out of winning trades on Boeing. We've closed out of a winning trade on EEM, Twitter, USO, XLE, EWZ. Those are all trades that have had winners closed out on them. So, if I zoom out here, I'll show you my entire watch list. I mean, it's just, you can see the winning trade here on EEM. We'll talk about that over the weekend. We had a winning trade here on symbol BA. That's Boeing. We've had a really nice move to the upside there. We've got Tesla. Let's take a look at Tesla. This is another one that we took a look at over the weekend. Tesla's working out well for us. It just hasn't quite hit full target yet. Our full target's down at 226.30. The nice part about this trade, we have hit first target, so the stop has gone down to break even here. We've reduced a lot of the risk on the trade. So now we're basically, we're taking a lot of the pressure off the trade. Now we're looking to see one more push to the downside. We've got a profitable trade on, so now let's just see if we can get some follow through, see if the market pulls back over the next couple days, and see if we can hit some targets. Another one that we have going, CME Group. You can see the trade down here. This one, we can't really break away from the entry point. So we're hovering right around that entry at the moment. We'll see what plays out on this one over the next couple of days. So CME still in a trade, still working for us, and we'll see what plays out. Let's talk about the financials before we wrap it up. These trades, unfortunately, let's take a look at them here. We talked about these trades over the weekend. I unfortunately missed these. Okay, they're both winning trades so far, and unfortunately I'm on the sidelines. The reason being, we talked about this over the weekend. We had this entry point at 50.21. Okay, but we had a gap to the upside on Monday morning, and we gapped up above the entry point. Remember what I just said about gaps. We don't chase gaps. So I was looking for a pullback to get in sync with that trade. Unfortunately, Monday morning was a huge morning in managing open positions from last week. So while I was busy trying to get out of trades, I missed this entry point. If you would have been quick right at the open, you may have been able to catch it. I just was not able to. And unfortunately, I missed out on a winner because we came up, hit first target, stop went to break even. We got halfway in between the first and second target, so we started to initiate a trailing stop, and that's where we got taken out today with a partial profit. So as great as the last couple weeks has been, I've missed out on a couple of profitable trades as well. So, and that'll happen when the market gets active and you have multiple setups across your watch list working at the same time. It can be a lot to handle at times. Let's take a look at Goldman Sachs. This is another one that I talked about in the weekend video. We had this entry point last week towards the end of the week on Friday. We had an entry point at 176.99. It hit that entry point right at the close on Friday, but like I've mentioned numerous times now, I don't like to get into trades right in front of a 0-0 level. Okay, notice that entry point was right on top of 177.00. So I made an adjustment. I moved the entry point up. The problem there was, look at where the open was on Monday. Look at this gap. I'm circling it right here on the chart. So the gap on Monday, we gapped up above my adjusted entry point. Okay, I don't chase gaps. We've talked about that. So I needed to wait for a pullback, and you can clearly see from the chart, it never pulled back. Now, I did have a student that was able to catch it Friday afternoon, and that was great because he was able to book the full target. So the system did its job. It identified the trade for us. I just was not able to catch it. So, a lot of winning trades here recently, but unfortunately I missed out on a couple on the financials on Citigroup and Goldman Sachs. So I'll just be looking for the next setup here. So over the next, what am I anticipating here over the next couple of days as we wrap up the week? I'm looking for a decent pullback. Okay, I'd like to see some of these names work off some of these overbought levels that we've seen develop here just over the last couple of trading days. So like I mentioned, we've got some news events tomorrow that could be market movers. Let's see what develops. And again, I can't stress this enough. This watch list of names, these are the names that I trade all the time. Okay, you're not going to find me flipping back and forth trying to pick the best names to show you. We could very well come in over the next couple weeks and instead of looking at winner after winner, we could have some losers, and I'll show you those. It's just I'm trying to get consistency here to show you what types of returns you can expect by really focusing in on a small list of names. So I'll be back later in the week. I'll highlight some of our short premium trades that we did take. Really powerful trades, a little bit more advanced than just buying calls and puts, but a lot of potential profit there as well. So let's see what happens over the next couple of days. I will be in over the weekend to give a weekend recap, see how we wrap it up for the week. If you ever have any questions on anything I talk about here, if you'd like more information, feel free to send me an email. It's mike@netpicks.com. All right, so good luck as we wrap up the week, and we'll talk to you guys over the weekend.